current Income Tax Act provisions do not clearly address the tax treatment of certain payments arising from software distribution arrangements, payment card schemes, payment processing systems, and related digital platforms. This has created uncertainty and disputes regarding the taxation of interchange fees, merchant service fees, and other payments made for access to this system. The bill therefore proposes amendments to clarify the definition of management of professional fees and royalties in order to provide a clear legal framework for taxation of such payments and reduce opportunities for revenue leakage. Mr. Speaker, gambling activities have grown significantly in recent years, particularly through digital platforms. While these are legitimate activities, winnings from gambling are income, and like any other income, they should be taxed. The bill therefore proposes to introduce withholding tax on winnings, lotteries, and prize competitions. Mr. Speaker, the scrap metal trade is a significant economic activity that supports the livelihood of many Kenyans. To improve traceability of transactions and strengthen compliance for scrap metal trade, the bill proposes to introduce a withholding tax on incomes earned from the sale of scrap metal at a low rate of 1.5% of the gross amount paid. Mr. Speaker, currently payments made by the national carrier to non-resident service providers are exempt from payment of withholding income tax, while similar payments when made to residents are taxed. To promote fairness and ensure consistent tax treatment between resident and non-resident service providers, the bill proposes to remove the exemption from withholding tax on payments made by the national carrier to non-resident service providers. Value-added tax, VAT. Mr. Speaker, I will now turn to the proposed amendments to the value-added tax. Mr. Speaker, dialysis remains a life-sustaining treatment for many Kenyans living with kidney disease. Yet the cost of essential renal treatment equipment continues to place pressure on households and healthcare providers. The bill therefore proposes to exempt dialyzers, which is a critical life-saving component for patients experiencing kidney failure, from VAT to reduce their cost and make renal treatment affordable. Mr. Speaker, the government recognizes the important role that trade is in used clothing and footwear, commonly known as mitumba, continues to play in supporting livelihood and affordable access to clothing across the country. To simplify compliance, the bill proposes to charge VAT at the point of importation, while subsequent domestic sales of worn clothing and worn footwear will be exempt from VAT. This means that mitumba traders selling to everyday Kenyans will not be burdened with VAT obligations. Contrary to what is being said out there, we are making mitumba more and more cheap because there will be no multiple VATs. You only pay once at the point of entry. Mr. Speaker, currently passengers arriving at the ports of entry in Kenya are allowed VAT exemption on value of goods not exceeding only US $300. This threshold has remained unchanged and has not kept pace with the current realities. The bill therefore is proposing to increase the VAT exempt threshold on value goods for passengers arriving at the ports of entry from US $300 to US $2,000. Mr. Speaker, the scrap metal sector plays an important role in supporting local manufacturing and recycling activities, but presents significant challenges in administration of input VAT. To simplify VAT administration within the sector, while complementing the withholding income tax framework proposed under the Income Tax Act, the bill therefore proposes to exempt scrap metal from payment of VAT. Mr. Speaker, public-private partnership continues to play an important role in the delivery of strategic infrastructure projects across the country. To reduce the cost of implementation of the projects, the bill proposes a VAT exemption for goods and services imported or procured locally for use solely in the approved public-private partnership infrastructure projects. Mr. Speaker, the rapid growth of digital payment platforms has created uncertainty regarding the VAT treatment of certain payment facilitation and processing services. While these services support financial transactions, they are distinct from the underlying financial services. The bill therefore seeks to clarify that core financial services, including money transfer services such as M-Pesa, will remain exempt from VAT, while platforms that facilitate services such as merchant acquiring, payment gateway, aggregation, and settlement services will qualify for exemption. will not qualify for exemption. Mr. Speaker, to promote consistency in the treatment of input VAT and support proper administration of the VAT framework, the bill is proposing to require adjustment of input VAT previously claimed where goods that were intended for taxable supply subsequently become exempt while still in stock. Mr. Speaker, Kenya's tax expenditure was estimated at 286 billion or 1.8% of GDP in 2024, a decline from 368 billion or 2.4% of GDP in 2023. But Mr. Speaker, to further reduce tax expenditures, I propose to rationalize some of the existing incentives, such as to remove VAT exemption on certain goods and services currently exempt, including denatured ethanol, direction finding compass, affordable housing construction inputs, tourism facility construction inputs, and aircrafts of Chapter 88, excluding parts and large aircrafts of over 2,000 kilograms. These are what we call choppers, helicopters. We are removing them from VAT exempt. But aircraft parts will still enjoy VAT exemption. To exclude from VAT exemption spare parts applicable to official aid-funded projects to reduce opportunities for misuse of the exemption. So we exempted the vehicles, but not the parts. Transfer selected supplies from zero-rated status to VAT-exempt status in line with the national tax policy objective of limiting zero rating primarily to export. To exempt mobile phones from VAT as part of the simplified taxation framework for mobile phones outlined under the proposal under Excise Duty Act. So when we talk of excise duty on phones, moving from 10% to 25%, they talk about that, but they fail to say that we are removing VAT on mobile phones from 16% to nothing. So the above measures are expected to further lower tax expenditures as a share of GDP, hence revenue collection. Excise Duty Act. Mr. Speaker, we now turn to the proposed amendments to the Excise Duty Act. Mr. Speaker, currently, more Kenyans are drinking bottled water in both urban and rural areas. The bill is proposing to remove excise duty of 6 shillings and 41 cents per liter of bottled water. We are removing excise duty on bottled water. Mr. Speaker, it is expected that the vendors of bottled water will pass this benefit to the ordinary citizen by lowering the price of bottled water because it has ceased to be a luxury. Mr. Speaker, mobile phones have become essential tools for enhancing communication, access to information, and delivery of services. They support among others, education, businesses, financial services, e-commerce, healthcare, and social interaction, while also promoting digital inclusion, productivity, and social economic development. Mr. Speaker, to further encourage use of mobile phones in the country, the bill is proposing to simplify taxation of mobile phones by replacing the existing multiple taxes and levies with a single excise duty charged at the rate of 25% at the point of activation on any telecommunications network. This measure will lower the prices of mobile phones in the country. I heard another leader saying 25%, but I'm asking, why is he complaining about 25%? Does he want us to remain at 55.5%? Because that is the rate as at today. Mr. Speaker, in recognition of health risks associated with excessive sugar consumption, the bill proposes to increase excise duty on sugar-sweetened beverages from 14 shillings per liter to 20 shillings per liter. Mr. Speaker, in support of public health, the bill also proposes to adjust excise duty rates on other manufactured tobacco and tobacco substitutes, tobacco extracts, and essences from 11,382 per kilogram, shillings per kilogram, to 12,550 per kilogram. While the excise duty rates applicable to cigars, churros, cigarillos, I don't consume this, so I have difficulty in reading, containing tobacco or tobacco substitutes will be adjusted from 16,260 shillings per kilogram to 18,000 shillings per kilogram. I don't know whether Honorable Mboko knows about this more than I do. Mr. Speaker, betting on horse trading is currently exempt from excise duty. In order to create fairness in the taxation of betting and gaming activities, the bill is proposing to remove this exemption. Further, to expand the scope of taxation, the bill proposes to amend the definition of gaming wallets to include land-based betting and gaming activities. Mr. Speaker, to promote fairness and consistency in the taxation of similar products, the bill is proposing to harmonize excise duty treatment within the alcoholic beverages sector by removing the preferential excise duty rate of Kenya shillings 10 per centiliter of pure alcohol for alcoholic beverages manufactured by small independent brewers. Mr. Speaker, in the Finance Act of 2025, excise duty rate for undenatured extra neutral alcohol supplied to licensed manufacturers of spirituous beverages was set at 500 shillings per litre. To support manufacturers in this sector, the bill proposes to reduce the applicable excise duty rate to 80 shillings per litre. And in addition, the bill proposes amendment to clarify that this rate is applicable to both locally purchased and imported undenatured extra neutral alcohol supplied to licensed manufacturers. Mr. Speaker, to address environmental externalities, the bill proposes to introduce excise duty on coal at the rate of 5% of the excisable value. The bill also proposes to extend excise duty on plastic articles for locally manufactured products in order to promote consistency in tax treatment. And Mr. Speaker, the bill further proposes to establish a clear excise duty taxation framework for vintage and collector vehicles. This proposal relates to vehicles whose year of first registration is at least 30 years before the date of purchase and whose value is at least 10 million shillings. Tax procedures. Mr. Speaker, I have about 30 more pages.
Nobody's complaining.
Yeah. Looking at the time. Now, on Tax Procedures Act, Mr. Speaker, the proposed amendments to the Tax Procedures Act seeks to strengthen tax administration, improve compliance, support digitization, and make it easier for taxpayers to meet their obligations. Mr. Speaker, currently, foreign investors are required to obtain KRA PIN before opening Central Depository and Settlement Corporation, that is CDSC's, accounts to participate in trading in the Nairobi Securities Exchange. In order to improve the attractiveness of Kenya's capital markets to foreign portfolio investors, the bill proposes to exempt foreign investors from the requirement to obtain KRA PIN solely for purposes of opening Central Depository and Settlement Corporation accounts. Mr. Speaker, income earned by non-resident investors from investment in the Nairobi Securities Exchange is subject to withholding tax as a final tax, and they are not required to file annual income tax returns. Mr. Speaker, I am grateful that this House approved the Virtual Asset Service Providers Bill of 2025 that was subsequently enacted in 2025. Mr. Speaker, currently, there is no reporting framework for virtual asset transactions. In order to address this gap, the bill proposes to introduce a virtual asset reporting framework for virtual asset service providers so as to improve visibility of virtual asset transactions and align Kenya's reporting framework with the international best practices. Mr. Speaker, to simplify compliance, reduce filing errors, and improve efficiency in tax administration, the bill proposes to amend the Tax Procedures Act to provide for pre-populated tax returns using information already available to the Kenya Revenue Authority. And under this amendment, taxpayers still retain the right to review, confirm, or amend the information before submitting their returns. Mr. Speaker, to strengthen the integrity of the tax system and prevent tax arrangements designed primarily to obtain a tax benefit while preserving fairness for compliant taxpayers, the bill is proposing introduction of a general anti-avoidance rule applicable across tax laws. Mr. Speaker, the Tax Procedures Amendments Act of 2024 provided for a tax amnesty on penalties, interest, and fines for taxpayers on tax liabilities accrued up to 31st December 2023. This facilitated taxpayers to clear principal tax liabilities to government. In order to encourage settlement of existing tax liabilities by more taxpayers, this bill is proposing a 6-month amnesty beginning 1st July 2026 for tax liabilities accrued up to 31st December 2025. Under this amnesty, taxpayers who settled the principal tax due within the amnesty period will qualify for waiver of the related penalties, interest, and fines. Mr. Speaker, to support faster resolution of system-related issues and improve taxpayer confidence in digital tax administration, the bill proposes to allow for waiver of penalties and interest by the Commissioner up to a specified threshold of 2 million arising from electronic tax system errors. Mr. Speaker, to improve continuity of tax records and simplify compliance for reinstated entities, the bill proposes to provide for automatic reinstatement of a personal identification number where the registered company or other entity is restored to the official register. Mr. Speaker, to improve efficiency in tax administration, the bill is proposing to allow tax assessments to be issued based on information lawfully available to the Commissioner. Mr. Speaker, to further align enforcement of tax compliance, the bill is proposing to amend the Tax Procedures Act to clarify that enforcement of tax collection when a tax appeals tribunal or a court judgment on a tax dispute is in favor of the Commissioner shall only be suspended where a stay order has been granted. Mr. Speaker, to lower compliance costs and simplify customs clearance procedures, the bill is proposing to remove the requirement for importers to present certificates of origin where such certificates are not necessary for purposes of claiming preferential tariff treatment. Now let me turn to Miscellaneous Fees and Levies Act. Mr. Speaker, under the Miscellaneous Fees and Levies Act, the bill proposes to rationalize the application of import declaration fee and railway development levy exemption on aircraft by limiting the exemption to aircraft parts and large aircraft used for commercial air transport. This measure is intended to better target the exemption while supporting Kenya's position as a regional hub for aircraft maintenance and aviation services. Mr. Speaker, the bill is also proposing amendments to clarify the application of customs procedures to all fees and levies imposed under the Miscellaneous Fees and Levies Act. These measures are intended to improve administration and support prudent fiscal management. Mr. Speaker, to support the growth of real estate investment trust market and development of Kenya's capital markets, the bill proposes to exempt from stamp duty transfers of beneficial interest in property into approved real estate investment trust. This measure complements the proposed amendments under the Income Tax Act on exemption of real estate investment trust from capital gains tax. Mr. Speaker, in line with the proposed simplified framework under the Excess Duty Act on mobile phones, the bill is proposing to exempt imported mobile phones from imported declaration fee and railway development levy, another benefit that is not being talked about by naysayers of the bill. Mr. Speaker, to increase resources available for road maintenance while ensuring that existing annuity obligations continue to be met, the bill proposes amendments to the Road Maintenance Levy Act to reduce the allocation to road annuity fund from 3 shillings per litre to 1.5 shillings per litre of fuel. And this reduction of 1 shilling and 50 cents per litre of fuel will be allocated to road maintenance levy funds. Mr. Speaker, let me now conclude. Mr. Speaker, as I conclude, I want to underscore that we have navigated a period of extraordinary challenge, yet the economy has held firm. Kenyans have demonstrated remarkable resilience and patience, and this government has remained steadfast in its commitment to deliver on the promises of the bottom-up economic transformation agenda at the most difficult period in the history of this country. Mr. Speaker, this budget was carefully crafted against a backdrop of limited fiscal space and competing priorities. It reflects prudent choices and disciplined fiscal management while directing resources towards programs and interventions that will have the greatest impact on the lives of ordinary Kenyans while staying firmly on course with our fiscal consolidation plan. Mr. Speaker, the reforms I have outlined today are designed to cushion our citizens, strengthen economic resilience, and lay the foundations for sustainable growth and transformation. They will stimulate job creation, ease the cost of living, and accelerate economic transformation of our people, that our people deserve. Mr. Speaker, this budget is deliberate, decisive, and targeted. It channels scarce resources to where they catalyze the greatest economic and social returns. To smallholder farmers and pastoralists, to MSMEs and youth, to health and education, to infrastructure that connects markets, and to institutions that uphold the rule of law. Every allocation is chosen to multiply employment, protect the vulnerable, advance equity, and unlock private investment. By prioritizing inclusive bottom-up growth, we will not only sustain recovery, but accelerate shared prosperity across Kenya. This is therefore a budget for Mwananchi. This is a budget for the people. I call upon honorable members and all Kenyans to stand behind its implementation as we work together with purpose and resolve towards our shared prosperity. Together, we can translate these investments into jobs, higher incomes, and a better future for every Kenyan. At this point, Mr. Speaker, I wish to thank His Excellency the President, Dr. William Samoei Ruto, and His Excellency, the Deputy President, Professor Kithure Kindiki, for their unwavering support, leadership, and counsel as we prepared this budget. I am forever grateful to His Excellency the President for the support he has given me and my ministry. I am also greatly indebted to the Prime Cabinet Secretary, the Attorney General, my fellow Cabinet Secretaries, all the Principal Secretaries, accounting officers, and all personnel across government ministries, departments, and agencies who have diligently contributed to the development of financial year 26-27 budget. Allow me to thank you, Honorable Speaker of the National Assembly, and your counterpart in the Senate, the majority and minority leaders, and the entire House leadership, including the respective clerks, for supporting the approval process of the financial year 26-27 budget. My sincere thanks to honorable chairs and members of both the Budget and Appropriations Committee and the Finance and National Planning Committee and all other departmental committees of this House, as well as the staff of the Parliamentary Budget Office, for their constructive inputs and leadership during the approval process of this budget. I appreciate in a special way Dr. Chris Kipto, the Principal Secretary for the National Treasury, and the staff of the National Treasury who have worked tirelessly, hard, and long hours to ensure that this budget and the supporting documents are prepared and supported and submitted within the legal timelines. I also wish to appreciate my two other Principal Secretaries at the National Treasury, namely Dr. Boniface Barasa Makoha, the Principal Secretary for State Department for Economic Planning, and Mr. Cyril Wagunda Odede, the Principal Secretary for State Department of Public Investment and Assets Management, and their respective staff for the support during the preparation and finalization of the budget for financial year 26-27. My sincere appreciation also goes to the Governor of the Central Bank of Kenya, the Commissioner General of the Kenya Revenue Authority, as well as the management and staff of both institutions, and all MDAs for their valuable contributions to the budget process. My gratitude to our multilateral and bilateral development partners for their continued technical and financial support. I also thank the private sector for their participation and contribution in the budget process. I wish to appreciate the members of the Fourth Estate and all non-state actors for the active engagement and participation in the financial year 2026-27 budget process. Mr. Speaker, I cannot forget to mention this. My sincere thanks also goes particularly to my dear wife, Madam Rhoda Mbadi, and my children who have remained my pillar. In the course of the year, calls of duty would be challenging, but when I got home, I felt relaxed among them. I will forever be grateful for their support, inspiration, and prayers as I executed my duties at the National Treasury. Finally, Mr. Speaker, I wish to thank Kenyans from all walks of life who gave their suggestions and proposals throughout the budget-making process. Thank you, and may God bless Kenya. Thank you.
Thank you. Minister.
Mr. Speaker.
Yes, go on.
Mr. Speaker, before I resume my seat, you will recall that I have already submitted to this House the budget estimates and the Finance Bill 2026, together with the accompanying documents as required by the Public Finance Management Act, CAP 412A. Today, I further submit the following documents to this August House and request that you generously, you graciously, receive them. Number one, budget statement for financial year 26-27. Number two, the 2026 budget policy statement. Number three, estimates of revenue, grants and loans for the financial year 26-27. Number four, financial statement for the financial year 26-27 budget. Number five, medium-term debt management strategy 2026. Number six, budget highlights, the Mwananchi guide for the financial year 2026-27 budget. And I believe we have put here also the Kiswahili version. Number seven, statistical annex to the budget statement for the financial year 26-27. Thank you, Honorable Speaker. Thank you, honorable members.
You may take your seat, Minister. Order. Honorable members, I wish to thank the Cabinet Secretary for National Treasury for ably making a public pronouncement of the budget highlights for the national government for the financial year 2026-27 and the medium term and the revenue-raising measures. In this regard, honorable members, I confirm that in conformity with the provisions of sections 39 and 39A of the Public Finance Management Act, CAP 412A, and the Standing Order 244C, the Cabinet Secretary has submitted to the National Assembly the relevant legislative proposals necessary to actualize the revenue-raising measures to finance the 2026-2027 budget. This has since culminated in the Finance Bill 2026, which is under consideration by the House. Honorable members, it is now my pleasure to invite all honorable members, the Cabinet Secretary for the National Treasury and Economic Planning, other Cabinet Secretaries, representatives of the Judiciary, members of the Diplomatic Corps, and all invited guests to a reception at the Parliament courtyard hereafter. Honorable members, the time now being 6:13, the House now stands adjourned until Tuesday, 16th June 2026 at 2:30 p.m. I thank you.
You have been watching the pronouncement of the budget highlights by the Treasury Cabinet Secretary, Honorable John Mbadi. The broadcast has been